The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is Pi Day, 3.14 times infinity. Anyway, it's the 14th of March. You have a present coming, boys and girls, from my good friend Jim Twentyman. I posted into the Tiger Den a little, I guess it's a YouTube or whatever it is. It's a little presentation on the golden rectangle, of which pi is part of, and I think you'll enjoy it. It basically helps solidify why patterns work and stuff like that, but it shows how the golden triangle is put together and broken down, and you can see these triangles and rectangles that we get these patterns from, but I think you'll enjoy that very, very much. We have one other present because of Pi Day, and that is Ron Rossaway from the Denver Trading Group. That's the Denver Trading Group on March 23rd. Is featuring a fellow named Greg Fisher. I've never met him. I never heard of him. All I know is that he wrote his thesis on his MBA on the Andrews pitchfork lines. And I think that would be something that you, if you have an interest in technical analysis and patterns and stuff, you might want to take a look at that. Alan Andrews, I met him once way back in the 70s when he was very old in Florida. And he wasn't a trader, but he was a student of the market, and he actually knew and worked under Roger Babson. That's why I was drawn to him, because Babson was one of the first people in the 1930s and stuff that used, Fibonacci and stuff, but he never wrote about it, but he certainly, showed it in his works. However, anyway, that's neither here nor there, but that is on March 23rd. It's the Denver Trading Group. It's free. The only way you get to it is just go to denvertradinggroup.com, and then you can just register to it. But I don't know if the guy's any good or not, but there's so little about Alan Andrews that there's just, he might have something that's very, very interesting. So that's my idea. Anyway, okay, that's the end of the free commercials. All right, first of all, we have a situation. I have to talk about this. David Ackerman has had a position in Valiant Pharmaceuticals since $198 a share. Tom was mentioning it on the show just a little while ago. Believe me, folks, that guy's probably made. He lost $3 billion in this. He probably made more than $3 billion in something else. The only way you hold a stock like that is you think you have some information that is going to be positive, but the markets are seldom wrong, but men often are. And there's nothing wrong with this. I mean, I'm not saying anything bad about what he did or why he did it. That guy is far, far more successful than I am. But the whole theory of this is you've got to have a spot here where you got to say uncle. And Paul Tudor Jones has a fabulous quote about this. He says, "Lose your opinion instead of your money." And if we're looking at this chart, to me, back in February of 2016, we had a beautiful butterfly pattern there at around $68. It rallied up to 75, and then it gapped down, opening at 58, and from 58 it's gone to 12. And supposedly he sold his position out today at 11, so that must have been off the books. But somebody was willing to buy it at 11. So I don't know who it was. But anyway, remember, it's easier to lose your opinion instead of your money. And, that's if you take small losses and stuff here and there, you're going to be, far better off than if you, think you can put up a whole lot of money to make a lot of money. You put up a little money to make a lot of money. That's the bottom line. Now, I want to talk just a second here, since I was talking to Jim Twentyman today. Yesterday, actually. I wanted to show you the difference in the data. Now, this is the data coming from, I'm going to put this up. This is spot wheat, which is now May wheat. I'm going to put it up here so you can take a look at it. and you'll see that we have a full moon coming in here. We had a full moon on the top, if you'll remember, back on the 14th of February. Now we have a full moon here on Pi Day. It was actually on Sunday, but we're in that orb of that. It looks like we're right at a 61% retracement. The problem is, if you'll look in the upper left-hand corner of this chart where it says ZW, Z means it's electronic, W is wheat, and the pound F means it's the nearest futures contract. Well, what they do is they roll these over from March until May, and they don't take into account the difference in prices. And I wanted to show you what May wheat looks like if you had just been tracking May wheat and not just looking at pound F. This is why Twentyman is such a stickler on data, because he will not rely on continuation charts. And that's one of the keys of why his data is so good. Now you'll notice here that we still have a Gartley forming, but the Gartley is another 5 cents lower. So that's the thing to remember, that this data that sometimes that you see is not always what you like. What I try to give you here is what I get for the wow, they say that VRX is now at 10.75. Well, I guess it did trade at 11. Anyway, I try to give you the best of what I do, is because when I come in, when I switch from, like if I switch from the March S&P to the June, I start putting the June data in about a month before. And the same thing with this wheat. So I'm watching wheat. I do the same thing with corn. So those are the things, that I'm looking at. So just remember that this data, that sometimes what you see is not what you get. So try to double check it. That's one of the advantages of being in the Tiger Den, is the fact that you've got some really smart people out there that are following this really closely. I'm not just talking about Basil Chapman, Steve Rhodes, Andy, and David and Tom. I'm talking about the guys that are in there that are, in the battle every day, the heat of the battle. And you guys know who you are. So Mr. Z is there. Yeah, we got to call him the general. He's the Dwight D. Eisenhower, George S. Patton of the Tiger Den, in my opinion. Okay, we've got a divergence, folks. I'm not going to be able to cover it till the break comes up. We've got a big divergence in the stock market, and the first person that tells me what it is will win a very, very valuable prize. And I will not reveal what the prize is until next Pi Day. So can someone tell me what's really happening? What's the big divergence that's going on right now? Can anybody guess? Well, the time is coming up. Here goes the clock. Tick tock, tick tock. Judge is ruling. The alarm has gone off. Folks, it's a stock market, folks. The Dow Jones Industrial Average, let me just show you the chart here. This is really an amazing thing, because if you take a look here, we almost made a new high in the NASDAQ yesterday. We missed it by half a point. We took out the old high, remember, a week ago by half a point at 54.5, and we got up to 54 yesterday. But take a look what's been happening to the Dow Jones here, folks. Look at the Dow Jones. Since the election, what's up, Doc? We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I was talking about the divergence between the Dow Jones Industrial Average and the S&P and the NASDAQ. The S&P almost made a new high yesterday. At 54 even. The old high was 54.5. The high before that was 54, so possibility of a triple top. But that's totally different than the rest of the market. This is what was happening in 2000, folks. You know, the Dow topped in January, and the NASDAQ didn't top until March 24th, so maybe that's the possibility again. But that was a once-in-a-generation bubble because of the dot-com situation. And so many of those things, went to the cemetery for IPOs. Let's take a quick look here. We've got the bond market coming up here. The Federal Reserve is going to be meeting today and tomorrow. Then they have their little talk with the princess, and she'll be giving her idea of what's going on and the fact that they want to be accommodative and not rock the boat and all the nice, wonderful things that they say. But remember, the Federal Reserve is a private bank for bankers. They run our money supply, but if you want to read about it, there's two fabulous books. One is The Secrets of the Temple. The author escapes me. And the other one is The Creature from Jekyll Island, which is an island in Georgia where the Federal Reserve was formed back in 1913 on Christmas Eve. But those are really good books if you want to get an idea of what goes on there. Now, if you'll notice this chart, this is the really long-term chart on the bonds, and we've broken down below the level down here of the 61% retracement. We're starting to do that now also in the notes. We haven't quite done it as yet. I have to double check this morning because it's been a little weaker last night. But this market is so oversold, folks, that we're going to have some really big moves in currencies, and I would think currencies and bonds, but the bonds have already moved. They've discounted everything except a nuclear war. We're down, we made a high in these things a year and a half ago at 177. We're now trading at 146. And we hit 145 last night. But this is my best guess for the next day or so. I think we'll get down somewhere. We're 146 right now. And I believe we'll get somewhere between 145 and 144 down another 2 points. At 144, I will take off my selling hat, and I'd look to be a buyer there, just because it's a 1.618 expansion into Fed time, and it's already extremely oversold. But it can stay oversold. Just like stocks can stay overbought for months, we can still do the same thing in the bonds, and you have to use a relatively close stop on that of around 15 pips if you're going to do that. But watch that, and we'll see if if things are really going to work that way. But I think that's somewhere. You're right, Mr. P. I think it's somewhere between 140, 145, and 144 would most probably be the spot where they're going to have, and that's all it's going to be is a rally, boys and girls. It's not going to be any new bull market. It might rally, a couple months, but the bonds topped a long time ago. The Federal Reserve is behind the curve just a tad on this because of their quantitative easing, which is an experiment. And not only that, but very few people can understand it because they've never done anything like this before. And it caught on, in Asia, it caught on in Europe. And so that's the problem is in the bond market. I don't believe it's in the stock market. I believe it's in the bond market. If we've got a major problem, it will be in the bonds. We're starting to see a pullback in these rates between the high yield bonds, i.e. junk bonds, and the regular bonds. As you'll notice here, just a real while ago, we'll see here that you had a really nice pattern in the junk bonds, up with beautiful ABCD structure, just as perfect as you could get, a 1.27 expansion, and now they've started to move in tandem, with the Treasury bonds. But you can still see that Treasury bonds have taken out their November lows by a great deal, whereas the we're way above. We're not even at 50% retracement in the high yield bonds. So there's a big difference in some of these things. We've got a caller in, thank goodness, Victor from New Jersey. How's your weather, my friend?
It's good. It's very good. I think the government's up to this weather pattern, so tomorrow you're not paying attention to the market when their announcement comes out and they juggle around all their numbers. That's you know what I mean, the guy. But I'm looking for WPRT.
Okay, and can you tell me what that is?
It's Westport. They make like a WPRT. That's the symbol.
WPRT. Well, if you'll give me a second, I'm going to try to put this in here.
It used to be a high flyer. WPRT. It's right here. Yeah.
It's at 88 cents.
Yeah. It looks like a good candlestick there. I don't know. They make alternate fuel. They make engines. They make engines for coming. They make Ford engines. You know what I mean? Biofuel and all that. It's a legitimate company. I'm just saying, should I touch it or not?
No, 88 cents. Well, I can tell you this, Victor. Your downside is 88 cents. So, if you feel that's got some, strategy to it, it's okay. I don't do that very often, but about 10 years ago, I bought, what was the name of that? Piggly Wiggly. If you remember, this is a firm back in the South, is big supermarkets. Yeah. And that stock went from 40 to 1. And a friend of mine wanted to buy it, and I asked him why. And he said, because all the real estate that they earn. I said, well, then buy it. And I went on the pink sheets for $1, and it was later bought out for like $20 a share. So I'm not going to say it can't work, but the good part of it is your downside's 88 cents.
Yeah, I just don't understand. The company makes money. They have a lot of government contracts, and I guess the biofuel business isn't big anymore with buses and trucks. I don't know.
Well, there's something wrong here. It wouldn't be selling at 88 cents, my friend. That's there's not these people in Wall Street might not be the smartest, the sharpest knives in the drawer, but they're certainly not the dullest. So you got to remember, someone must know something. But at 88 cents, your downside is certainly limited. That part I do like.
All right. And can you check two more for me? Because I got to go FCX and Intel.
Okay, Intel, I can do that one. And what was the other one? FCX?
Yeah, Freestone, FCX.
That is a mineral company.
Copper. Yeah. They're based on the Aussie dollar or something.
That's based on copper, and copper has had some strong resistance up at 270. I believe we're in a downtrend in copper right now, so I wouldn't touch that one. Intel is that's like watching butter melt because it doesn't move very much, but it's a good company, really solid earnings and everything. So if you risk 5% on that, there's probably some upside to it, and how much downside I don't know, because it rallied with the rest of the market, but not nearly as much. So that would be my guess.
Don't you think that market should correct anyway? Because now when borrowing costs go up between the companies, a quarter point's a lot. Like when you're not making any money, you know what I mean? Don't you think the market should finally peter out? Somebody's going to wake up. If somebody told me when you're lending money in cross-lending, there's no, it does make your costs go up. And the government has to pay out even more when they pay back their debt now. Tomorrow's the debt ceiling. That's right. Tomorrow's the debt ceiling day too.
Yeah, we're going to find it. Anyway, thank you for calling in. I really appreciate it, Victor.
Thank you. Bye.
You bet. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at this crude oil chart. If you'll notice here, this is April crude, by the way. We are very, very close to the 61% retracement of the whole move down. That number comes in right around 47.33. We're at 47.53 last. So that would be something that if you like Fibonacci numbers, you might take a little nibble at that. I don't think you'd have to risk more than about 50 cents would be my guess. This old cowboy probably take a little nibble at it at that price. It's certainly better to buy it here than it is at 54, if nothing else. But anyway, that's it's got some really nice numbers there. And if you notice what happened at the 382, it had a little bit of a rally. At the 50% rally, it rallied over $1 a barrel. And whether this is going to be any type of a bottom, it's hard to find an ABCD down on that, Gator, because you don't really have any BC swings. There's no BC swing that's even 382 that I can find. And that's the real problem. It's basically being, flying Melinda to the downside. So there's not much you can really, do, with that. I think we're going to see a lot of volatility, I believe, in in everything. But the main things I think we're going to see volatility in are the currencies and the bonds and the crude oil related to this Federal Reserve stuff. And that's just my opinion of it. That's really what what I'm looking at. Whether it's going to be right or not, I don't know. But that's why I look at outlier events like in the bonds at 144, down about 2 points, from where they are. Then I would certainly keep an eye on that. On the upside today, if we can get those bonds anywhere near 146.28, that's probably be all that they have available to them today, would be my guess. Now, if we go and look at the gold market last night, if you remember on Friday we hit the 1195 level. We rallied our 17 bucks up to 1212. We came down to a 61% retracement last night to 1201. We had a little bit of a $5 rally. Right now we're trading at 1201.90. So there's nothing in the cards that make me think that gold is getting ready to do any rocking and rolling here right now. My premise that I'm watching right now happens to be in the crude, because we're getting very, very close to this 47.30 number. And because of the strength of this move on an hourly chart, I am going to, wait until I at least get some idea that this thing is going to, possibly hold here in crude. Then I'll be able to look. That's one of the advantages of short-term trading, because if the 47.35 level doesn't hold, you could be looking at 46.50, a whole $1,000 down. And that's a whole handle that I don't want to have anything to do with. So the way I handle this is, because we've been down now since we rallied up to 48.79 last night, that brings us into the 3 straight hours that we've really been down. Well, the last time this happened, was on Friday, where we came down for 5 hours. We went from 50.25 all the way down to 48.25. So we dropped $2,000. We could easily do that again in the crude oil. So, I'll watch to see how it handles this 47.35 level. I'd like to see it stay there for an hour, and then that you have a relatively good spot to have some support coming in. As far as the S&P, we rallied up to a 78% retracement of the previous high last night at that 23.73 level. And we're down about 10 points from that level. Doesn't mean much, but the Dow's the one and that's been the leader, folks. And remember, the Dow's biggest stock is Goldman Sachs, and we posted that in yesterday to show you that. In fact, we should do it again just to remind you that this had been the leader, all the way up. And so you want to be able to say, well, there's a possibility that this might be the thing that tell you that it's tipping over. This happens to be, I'm going to post it in here right now, which is a 4-hour chart, and you'll be able to see here that we had a pretty big divergence. Now, the other stock that was the big leader 7 years ago, the one that turned first and moved the fastest for quite a while, was the small cap, the Russell small cap. And here again, if you take a look at this Russell small cap, what's happened here is you'll look and see that we made this butterfly pattern, but we made a higher high on the president's address. You'll notice it made a slightly higher high, but look what's happened since that over the last 8 trading days. We came down and hit a 78% retracement, on Friday, and we hardly bounced at all. And that was a very, very important number. And now we're getting ready to go back through that number again. That's not a good sign, boys and girls. everybody that bought this stuff, on the anytime between the 21st of February and the 1st of March is now underwater. So whether that means anything or not, back in the old days it used to be, but who knows? We'll see. Okay, that's pretty much what's going on here, and we'll see how some of these things are moving around. But we're going to have some really big rocking and rolling. I mean, the dollar index is another one that is going to be the key to this, because if they raise rates, what this means, and they are going to raise rates, the market's already raised rates for them. You can see what our Treasury bonds are doing. But if they're going to do it, I mean, if they don't do it, folks, there's something really wrong. Somebody's got the Fed scared to death. But you'll see here on this dollar index chart that we've been at this 103 level several times in the past couple of weeks. That means it's a possibility that the dollar could drop. Now, why the dollar would drop when our interest rates go up would be a mystery to me, but I get mysteries all the time. So maybe it's the bonds are just way oversold, or the fact that we're looking at something that's just a total aberration from normal, much like quantitative easing that I've never been able to understand. And not only that, I have some really smart friends, and they're unable to explain it to me without any big revelations. I mean, they really don't know. They're just guessing pretty much like anything else. I never believed negative interest rates were very smart, but, that's me. Okay, let's take a quick look at one other chart that I think is really important. Here's one that I featured in the newsletter, and this comes from Investors Intelligence. Through Jim Cramer's website. One of our listeners here at TFNN forwarded on to me. But what I wanted to bring to your attention is that we're at the widest spread. In other words, the biggest number of bulls, the smallest number of bears on a percentage basis that we've had in several years. I think the all-time record, of course, was back on May 15th. Was it May 19th of last year, when we had our good friend Norm Winsky on, and that was when we had a new moon and Mercury was going retrograde. That was the top of the market. We had a 20-some% correction. Now you can see we're at record highs in bulls and record lows in bears, almost record lows in bears, not quite. If the old low is 13%, we're around 16% right now. But the volume that we're doing now is, it just keeps dissipating. We're losing participants in the market. If you take away the high frequency trading and auto trading, it would really be wild. We'll take a little break here. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I want to put up the Treasury notes. As you can see here, the overlay, the blue line that you see are the Treasury bonds, the 30 years. The notes are, 10 years, so they do have 20-year notes. I don't know why they call them notes, but usually anything more than 10 years is considered a bond. But that's just a nomenclature, I guess. But 30-year bonds are certainly, past 30 years. They got a 100-year bond in Japan. Basically, what we're looking at here is the low in December has been shattered by the Treasury bonds. We've gone, below the 1.27 level of that last move. We're approaching the 1.618 level. That's the level down at that 144 level. We're 146 and change right now. But if you'll notice the notes, over the last 4 days, we made a slightly lower low today than we have over the last 3 days. And we're right at, we're still above the lows that we made back in December. That was also a 61% retracement on the long-term charts. And if I look at this just from a charting perspective, I know the Fed's in there, ready to raise rates tomorrow. Maybe they're going to raise them a half. I don't know. But this does not look like a really bearish chart to me. That gap that you see there is that's a switch over from the March. From the March to the June. I haven't corrected that as yet because I don't trade bonds. They're 6 times the size of open interest that the bonds are, but the bonds are where the volatility is, and those are the ones that are really give you the most bangs for your buck as you're looking at some of these things that we're watching here today. But there's going to be pretty big moves, I think, in some of these things. But those are the ones that I'm really, trying to, follow really closely if this is going to happen or not. The key levels today to watch in the S&P. The Dow has already broken down below the key levels. It's made lower lows in the last couple of days. The rally back on the Dow was only 0.382. And that's another reason that you'd want to think that was something that would be important over a longer period of time. Now, I had one question that I wanted to answer, and I'm trying to find the chart if I can, because it's an interesting chart. It's basically the TBT, which is the ETF for going long the bond market, and I'm trying to pull this up. I had it all ready to go. I've got it marked. Shut the front door and raise the rent. I think I found it. Let me check. There it is. TLT. That's what I wanted. I said TBT. It's TLT. TBT is a short side. TLT is the long side. And if you'll notice here, we're below the 61% retracement. That could be due to contract rollovers. I'm not sure, but even though we are below it a little bit, we're still matching those. You see, we went below the lows of December. We have not done that in the notes themselves. That's another divergence that we see here. But you've got several numbers coming together here. You got a 61% retracement from 2014. You have a 1.618 expansion from 2016, and you have a double bottom from 2015. So there's a possibility here that we could get a pretty good rally here in TLT and just be in a rally in a bear market. That's all it would be, but it's very, very oversold, and the whole world knows that the Federal Reserve is going to raise rates. I mean, anybody that doesn't believe that, please raise their hand in the room now so I can see. Ooh, look at the hands coming up. A lot of people think they're not going to raise rates, but we'll see. All right, we'll take a look here. Folks, I was just sort of joking around with the rates because, it does make a difference what they do, really. An hour after she's done talking, the markets are going to do what they're going to do anyway. They always do. You look what happened in October of 2007. Bernanke, his speech, before the Congress, he said, everything looks pretty good. He said, I don't see any major problems anywhere, and that was the top of the of the real estate bubble that hurt so many people. So, sure, credit rates keep going up. This is how the bank makes their money. Boy, can you imagine rates are at 0.05 and they charge, I don't know what it is for interest rate. I think it's 13 to 24 points. Even the mafia doesn't charge 24%. Oh, wait, theirs is 24% a week. That's the difference. Okay, let's move on to the German bond. I wanted to show you the difference here that we have. This is the equivalent of the bond that we have in Germany. Now, this is not updated through yesterday. This is the chart that I do on Friday. And you'll notice that the bund made a beautiful ABCD pattern up here. And we couldn't even take out the highs of January in our bond. That was telling you how weak it was. And now we're here facing whatever the Fed is going to do over the next day or two, and that'll be something that's interesting. Question that I always get is about the gold and silver. Folks, the gold had a lot of support. Time out, boys and girls. They're calling me on my limit minder. And that is we are making a Gartley pattern in July beans. So keep an eye on that one. It may or may not work, but we're near the moment of truth in the July beans. We want to watch that. I've had this on my watch list for quite some time, and I have a question coming in. Oh, we got a caller from Michigan. John, are you there?
Yes, I'm here, Larry. This is John from Oakland, Michigan. How are you?
I'm very good. What can I do for you?
Well, Larry, I wanted to ask you a question. I play the Nugget, that ETF, triple gold stock.
Yep.
And they're going to do a reverse split. And with your experience, I wanted to ask you, what do you think of these ETFs that make these reverse splits? The last time they did a reverse split, the thing went up to, I don't know, maybe 100 or so, and then it came all the way back down to where we're at in the around $7 or $8.
Yeah.
As a rule, why are they doing the reverse split? And would you ever get involved with anything like that?
No, I don't get involved with anything like that. I'll tell you a little bit of history. But a reverse split is to get the price of the stock up to a price that because some of these hedge funds and mutual funds are prevented from buying things under $5 or $10 or $20. So in order to get the price up, they reverse it. In other words, they reverse it 20 to 1. If you remember, do you remember AIG when they went from 74 down to 38 cents?
Right.
And they made a reverse split to get the stock back up to whatever it was, $6 or $7 a share. But if you go back and look where it is right now, it's moved a little bit higher, but it's still down quite a bit. So I stay away from anything that a reverse split. I don't, and the manipulation is what one of our dentists are calling it, and you're probably what it is. But it's a very active thing to trade. I watch. I don't like ETFs. I think it's ETF stands for eternal trend funding or something like that because I don't understand it. They don't make any sense to me. But there's so many of them out there now, thousands of them. So every time something comes out, they got a new one. So I stay away from reverse splits or stuff like that. But I don't know very much. See, so you should ask someone that, Basil would be a good one to act. He knows that, and I think Tom would know more than I do. But I don't know, John. I really don't know.
Well, I appreciate your years of experience. I like listening.
John, I have an investment for you though.
Yeah.
Stay with me and come back. I've got a good investment.
All right, I'll hang up and listen.
Okay.
All right. Thanks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I was talking with John from Michigan about Nugget. And since we're talking about Nuggets, we're in the season for the NCAA basketball tournament. And if you think stocks are hard to figure out, these basketball teams are absolutely unbelievable. They've got Duke as the 6-1 favorite. North Carolina is second or third, and they've lost 6 times. You can get Michigan, John, at 85-1. And, they have a good basketball history. They come from a great conference. You can get other schools that are just absolutely unbelievable. I mean, UCLA is a fabulous team, and they're a 14-1 underdog. Arizona, who I think is going to win it all, is 10-1. So these guys are maybe they're pricing like IPOs. And that's a really good acronym for that is it's probably overpriced. But since I don't gamble, it doesn't mean a lot. But to see, some of these things, the way they do these with the favorites, I really don't understand it. But I don't understand a lot of things. So that's the main thing that you got to keep in mind. Watch the July beans, folks. We're within about 2 cents, right around $10 a bushel. Brings us down to a 61% retracement of the whole year's range. We've got a big ABCD pattern there, so you might want to watch that very, very closely. And we're within 2 days of the full moon, and that sometimes is a pretty good thing to look at. So we'll see. We did hit our 47.35 price. We just hit it in the crude oil. We're trading 47.32. Wait a few minutes. Make sure it holds that level. I'd say wait about 20 minutes, and if it's still around this level, you could buy it with about a 30-cent stop probably. It's about as cheap as you're going to be able to trade the corn anyway, crude oil anyway. So we'll watch it very closely. The 23.59 doesn't really mean a whole lot in the S&P. It's just down, basically making an ABCD from the last few days. But if we get below, 23.50, then they have to start reevaluating a little bit, mainly because of the divergence in the Dow Jones and the Russell. Those are already started down, folks. They're way below where they were on the February 28th.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.